So if you have any questions as we go through our session this afternoon, feel free to enter them into the chat. And hopefully everyone can hear us okay. Let us know, just give us a quick thumbs up that we're good. And I'm going to get started. So what I'd like to know, first I'd like to welcome you. We did our first call on Monday. It's now Friday and the market has been all over the place. The government's been all over the place. And it seems the coronavirus is all over the place. So we live in interesting times. I think that was a proverb once. And another gentleman said, never let a good calamity or whatever it is go to waste. So certainly the market's not letting this go to waste. The government's not letting this go to waste. We want to make sure that you're up to date, current, get your questions answered, know what's going on with law changes as a result of this pandemic that's happening, give you a little bit of insight on markets and some other things that we think you might want to be thinking about at this point. And as I said, just make sure you're all doing okay and know that we're on top of this and what our next steps are here at Raskin Global. So let me start by just asking if you have any questions, anything you want to share, ask, so that we can answer. We'll make sure that we answer all your questions. I want to know how everybody's doing. I hope you're all well. I hope you're washing your hands. I hope your kids are home and you realize what a difficult life teachers have. My wife asked if it was a conflict of interest if she sent our son to the principal and what would happen if she did. So Matthew's at home, finishing out now his senior year online, or who knows what's next. So questions anybody has, feel free. I'd be happy to answer anything we've got from anyone out there. Anything in the chat? Feel free, post whatever you've got. Okay, so first question is, all's well in Tucson. That's excellent. Good to hear. It's probably a little warmer than it is here. And great question. The question is, will we talk about when you'll be contacted individually? So if you are a client of Raskin Global's, I can promise you that you will be spoken to within the next 7 days. We have already started reaching out to every one of our clients and asking and talking about what's going on for you, checking in and going over specific recommendations for your specific situation. If we haven't already gotten to you, know that you are on the list and we are working through it. To give you a little positioning of how we're doing this, I thought it prudent that we start with our most senior clients, and I mean that by age, not tenure. So we have started with our database of talking to our oldest clients first, and our reasoning for that is, for the most part, there are issues regarding required minimum distributions relative to IRA accounts. There are issues relative to Roth conversions, and those things are age specific. And so we wanted to start with the oldest first. And we have a lot of work to get through to take a look at everybody's living balance sheet, make sure everything's up to date and current, make sure that we know what we want to advise relative to your situation. And we've started calling. So if you haven't been called yet, know that you're either younger, and if you're really young, you're going to be last on the list. If you have something specific you want to address and you don't want to wait for me to call you, feel free to send us an email. We will get you on as soon as possible. But as the randomness goes, the randomness is age down. So depending upon where you fall on that ledger is when you'll get the call. Again, if you want something sooner, just let us know and we will reach out if we can sooner than on an age basis. Thanks for the question. Any other? Okay, so I don't see any others right now, so I'm going to jump back to the issues I want to discuss, talk about what's going on, and then we'll have time for questions at the end. If you please put them in the chat, that would be great. And then that way we'll make sure that we answer everything that's coming through. So a few things that I want to talk about. As I said just a minute ago, the market obviously has taken a tumble. We've seen this before. In 33 years in this business, certainly noticed a number of times that the market has gone down and gone down significantly. And I've noticed that after the market goes down, it manages to come back. It always does. It always has. My guess is it always will. If we think this time is different, meaning that I guess the world is ending and that this pandemic will never go away and markets will collapse and every company that produces goods and services will no longer have employees, no longer produce goods and services, and no longer be viable as an entity, then I would be willing to bet we have a lot bigger worries than what's going on with the stock market. Having said that, we absolutely recognize what's going on in the stock market. We're down 30% from the highs. We're down a little over 20% over the last year, and we've pretty much given back all the gains, almost all the gains on the S&P 500 since Donald Trump was elected president, 2017. So we recognize this is a major downturn in the market. As a result of that, what should you be doing? We'll address that in just a little bit. But I want to address some other things that are going on in the overall financial world and make sure that you're aware of what these are, what your opportunities and options are, and how to take advantage of what's going on around us. So the first thing I want to talk about is taxes. For those of you that haven't seen it, the IRS announced through Treasury this past week, a couple days ago, that taxes, federal income taxes would be due not April 15th, but delayed and deferred until July 15th. No penalties, no interest. If you owe income taxes, it's a great opportunity for you to escrow the cash and pay that money later. Instead of paying April, you have now till July. This morning, Treasury Secretary Mnuchin announced that not only would the tax payment deadline be delayed, but now the tax filing deadline has also been delayed. That means you're in a position of not having to rush out to your accountant's office when they're telling you you have to stay home, or file your extension and figure out how to do it by yourself. You now have until July 15th to both file and pay your federal income taxes. Now let's be clear, if you are due a refund, it is absolutely in your best interest to get it as soon as possible. That would mean filing your taxes by April 15th and getting a refund if due. But if you have your taxes and you know you're going to owe money, I would escrow that money, make sure you keep it liquid and have it available, because we don't know right now what financial future will look like in the next X months. It'd be better to have liquidity and pay it in July, if that's the case, rather than pay it in April and then wonder. Now in Maryland, Governor Hogan and Peter Franchot, our comptroller, have also made the decision to delay payments of Maryland state taxes due to the same July 15th deadline. Have not seen anything yet about the filing. So it appears at the moment that you would still have to file a Maryland extension by April 15th, but you can pay the taxes through July 15th. So again, if you owe Maryland taxes, make sure you file the extension if it's warranted, and then don't worry about paying the taxes due until July. If that's the case, keep your cash. Certainly if you're in a business, if you're a small business owner, having your cash may be more advantageous at this point than giving it to the federal and state government. If you're not in Maryland, I would say go to your state controller's office, look online, find out if they've agreed with the federal statute and have now made the decision to delay the payment of the tax. If so, absolutely delay. If not, make sure you file on time and pay the taxes that are due. Another thing that I want you to make sure you're aware of is those of you that have student loans. If you've been affected by the coronavirus, that is, you've been laid off, or God forbid you're sick, You can contact your lender relative to student loans and put those payments on deferral. Now, there has not been any statements yet from anybody other than that I've heard Bank of America that is willing to suspend interest relative to outstanding loans. However, you do have the opportunity to contact your student loan provider, servicer, and ask for a deferment of payment of the loans if, as a result of this situation, you are unemployed or adversely affected. Make sure that if you choose to do that, you recognize that they are not eliminating interest. They're simply allowing you to defer the payments, and those payments unmade, interest and principal, will still be due and added to the back end of the loan. Having said that, this may be a very good time to log into the various websites and look at refinancing student loans. For those of you that may have already done that, this may be a good time to do it again. You pay nothing to inquire about the opportunity to refinance. And if you can find rates lower than the rate you currently have, whether it's the original rates or the refinanced rates, now would be a good time to do that and look into refinancing those student loans again. Or if you haven't done it, certainly now's a great time, given where interest rates are, to take a look at refinancing those student loans. Which leads us to the next, and that is your mortgage. Today, interest rates are at an all-time low. 30-year mortgage rates are at an all-time low. If you're going to stay in your house for a little while, everyone should be looking at the potential to refinance that mortgage and reduce the cost of the debt on your home. Banks right now are in an interesting position relative to debt. With regards to mortgages, rates are changing within the day, not just on a daily basis, but within the day. Why? Banks are opening in the morning and demand rolls in for refinances of mortgages. At that moment, what the bank is doing is quoting a rate. And by 12, 1 o'clock, 2 o'clock in the afternoon, those rates are going up. And the reason is the demand for refinances is so significant that the banks can't handle the load right now. So early morning refinancing opportunities begets the best potential rate. And if you get a quote and you can lock that rate in, now's the time to potentially refinance and cut your mortgage costs. It's a great opportunity simply to re-rack the loan, start a new 30-year term, and look at reducing your interest rate and your net mortgage payment costs. If you don't want to refinance to a 30-year, 20 and 15-year rates are also at all-time lows. Please give us a ring and consult with us if you get a rate, a quote, and terms, and we will help you decide whether or not those are the best rates and terms we've seen relative to the market space. We had a couple just in the last few days that went to their local credit union to refinance their loan, got a fantastic rate, a great term on the loan. There's only one problem. The closing costs were extremely high. So we reached out to a mortgage broker that we do work with, and we were able to cut their borrowing closing costs almost 2/3 from what they were quoted from another source with the same term and interest rate that they were being offered. So please look to refinance, reach out to us, let us help you reduce these costs and reduce the upfront cost of the acquisition of that new loan if you choose to proceed. This is what we're here for. We're here to help you make great decisions and take advantage of the opportunity that is this horror we're confronted with, this pandemic at this point. But by all means, most of us are being asked to be home, to work from home. And as a result, we probably have a little more time on our hands. And this is a good time to baseline your financial life and make sure that you know where you are and where you're headed. The next thing I would say, we're in March. So this will not apply on a current basis, but will soon. And that is those of you that have children in college right now, and you're thinking about paying for next year's or next semester's tuition. If you have a 529 plan, chances are the value of that 529 has come down as a result of the market corrections and bear market that we're now in. If that's the case, this is not the time to take the tuition out of the 529 and send a depressed value to the college. You will be selling more shares at the bottom than you would have just a month ago at the top of the market. So what do you do instead? Now is the time to consider getting a student loan. And as such, you take the student loan, you have your student take the student loan and use that to pay the tuition for the next semester or year. This allows time for the 529 plan to recover some of its value. The beauty of this is that Congress at the end of last year passed and the president signed that up to $10,000 withdrawal from a 529 plan can be used to pay off student loans. My guess, although I haven't seen anything about this yet, in the face of what we are seeing right now, Congress will probably revisit this and attempt to allow 529 plan use to pay off additional student loan debt. For those of you that have kids in college right now and have 529 plans, I would urge you to call and write your congressmen and senators and ask them to do this. As such, you will have time to let your 529 recover value, borrow from student loans at extremely low current rates, and then use the 529 to pay off the student loan balance in the future. This could be a huge advantage. So reach out to your congressmen, reach out to your senators, ask them about this. The more they hear, the more likely they are to do it. And that would be a huge benefit rather than spending the money now out of the 529 plan at the depressed value. So next topic I want to discuss are, for our older clients, required minimum distributions. If you are over 70 and a half in 1999 or over 72 in 2000, by law, you are required to take a minimum distribution out of your IRA. The question is, when do you take it? So I just want to put a little bit of information out, and that is, A, if you intend to spend the money coming from your required minimum distribution, it may make sense to hold off till later in the year to take that distribution with the assumption that the market will recover when this pandemic dies down and business gets back to work and we see a market uptick, maybe not as dramatic and fast as we've seen the downturn, but we will see the market recover. And when that happens, taking your required minimum distribution at that time will be more beneficial if you choose to spend the money, because you won't be redeeming as many shares in this now 5-year, 4-year low market. On the other hand, if you intend to simply reinvest the proceeds of your required minimum distribution, and you want to get the money out of the IRA account and into your personal hands, into an investment account, invested the same as the IRA was, then what you want to do is take that required minimum distribution now, get it out and into the personal investment account, and allow it to grow in the personal investment account, where the future growth will be potentially tax-free or as capital gains taxes, rather than have that money sit in the IRA and recover and have you have to pay ordinary income taxes on the withdrawal in the future. So RMD, spend now, take later, invest now, take now. And that leads us to the next subject, which is Roth IRA conversions. Everyone, by law, is eligible to convert money from an IRA to a Roth IRA. When you convert money from your IRA to a Roth IRA, you have to pay taxes in between the transfer. So you take, let's just use an example, $10,000 from the IRA, you move that money to the Roth IRA, the $10,000 is taxed in your tax bracket. That's the negative. The positive is once that money is deposited in the Roth IRA, all of the growth and any withdrawals in the future are income tax free forever for you and your beneficiaries. I can't stress this enough. This is a phenomenal time to take advantage of the down market and transfer assets from your IRA to your Roth IRA, keeping those assets invested in the identical like portfolio structure that they were in the IRA. This will allow the Roth IRA to grow, recover the market losses, and then go from there. And all of the recovery and future growth will be tax-free for you and your beneficiaries forever. Now, who is this appropriate for? Just about everyone. Just about everyone. Now, if you are in a 10, 12, 22, or 24% tax bracket, and we have the ability to use those tax brackets to fill a Roth IRA, it is almost mandatory that we make this exchange. If you are in a higher than 24% tax bracket, we should discuss it and take a look at the today and the future of your expected tax rates and make a determination of whether or not this makes sense. But anyone in a 24% or below tax bracket should all be considering moving money from an IRA to a Roth IRA this year, and now is as good a time and better than most. So we will be reaching out to you again if we believe this is an appropriate strategy for you to employ. If you think it is and want to discuss it with us faster, then we can get to you. Or if you're not a client of Raskin Global and you want to discuss this and how to do it, reach out, send us an email, lraskin@raskinglobal.com. Get on our calendar. Let's have a discussion. Make sure that we're taking best advantage of these strategies now so that when the market recovers, you're in a tax-free position forever. Speaking of tax-free forever, another opportunity similar to the Roth IRA would be the purchase of or additions to cash value whole life insurance. Unlike the stock market, cash value whole life insurance has never and will never go down in value. Any money in a life insurance policy can never go down. It is guaranteed to go up, and the only question is how far up does it go each year? Right now, as this slashing of market stock values have gone down, all we've seen is cash value of life insurance increase. Sideline cash that you want to hold on to and want to earn a rate of return on, life insurance cash values are a great place to put emergency money, excess reserves, and know that no matter what happens in this market, it will not go down. Additionally, if we look at the whole life cash value today as a store of reserve, it is the place that you have the potential to withdraw from or borrow against at any time for any reason. If you own a business, the banks aren't thrilled with lending money right now. Your insurance company will. The banks aren't interested in refinancing commercial loans necessarily right now. Your life insurance company will. There has never been a death claim of a life insurance policy not paid to a beneficiary. There has never been a cash surrender value statement that has not been paid to an insured owner at a time of policy withdrawal. Don't worry about the life insurance companies. They are sound, solid financially. We have been on calls with executives from a number of the companies we use for life insurance and have been assured by all of them that your cash value is as secure as it ever has been and will continue to grow just as it always has. This is also a great time to look at, do you have enough? Is the term insurance that you hold sufficient? And is this a time that you might want to consider converting some of that term insurance to permanent insurance to put more of that reserve cash to work at a much better rate of return than the bank, the government, or most corporate bonds are paying today, with all the bells and whistles that a life insurance policy can provide, in addition to just the store of cash and the rate of return on the earnings that cash value provides. So get in touch with us and know that we are reviewing all of your policies as well as part of this analysis, and we'll be discussing that with you when we call. Another subject I want to take a look at is this question of value in the market as a whole. So that's the elephant in the room. And everybody knows that we've seen significant downturns in the stock market in the most recent month. Rest assured, we have been through this, as I said, over 33 years, a number of times. It is our belief, absolutely, that this will recover. The market will come roaring back and reach all-time new highs as we go forward. Here's what we don't know. We don't know when that's going to happen. No one knows if and when that's going to happen. The bottom line is the next 10% in the market, indeed the next 20% in the market, are wholly uncertain. And if nothing that this pandemic has provided an insight to, it should be that the markets only know the information that's in front of them at the moment, and all future unknowable information is what drives moves in the market. No one could have seen this coming. No one could have acted based on an unknown future, nor should you have acted on an unknown future. But right now we have the opportunity to take advantage of this and buy into this market to rebalance your portfolio to its intended asset allocation. So if a month ago your asset mix was half stock, half bond, and now we're down 30% from a market high, your 50% of the portfolio that was to be in equities is no longer 50%. Most likely the 50% of your portfolio that was in fixed income has held its own and maybe even increased a bit. So now the 50% that's fixed income still is, the 50% that was stock is now down, let's say 30%. Your account is now 35.50, equities fixed income. Your total assets are now $85, not $100. When this happens, our natural reaction is fear, stress, anxiety. I want to get out. I want to leave this pain. Know that we're aware of that. Your portfolio has been set up with these parameters in mind. We know that markets go down. What's happened here is nothing unusual. We just haven't seen it for the last 11 years. That doesn't make it extraordinary. It just makes it now. And the next step for you to take is to rebalance your portfolio to its originally intended allocation. What does that mean? It means if your account is now $85, it's time to move from fixed income and buy equities. This is what buying low feels like. If your account is 85, half stock, half bond is 42.5 each. We need to sell 7.5 of the fixed income and buy 7.5 of the equities low to bring that portfolio back to its 50-50 equilibrium. By doing that, you are acquiring significantly more shares at a lower price today. When this market recovers then, the stock market recovery, you will be in a position to see the bulk of those shares bought now increase in value dramatically and enable the recovery of your overall portfolio to happen dramatically faster than if you simply ride this wave and wait for it to come back on the other side. If you buy now and pick up these additional shares and the market goes down from here further, I can assure you our recommendation will simply be to buy more. Then in the future, as your allocation grows and your assets in the equity markets increase in value, you will be in a position to shave off the gains and put money back into your fixed income. And that's what selling high feels like. We want this for everyone. We are aware that the markets have gone down and we are aware that it's difficult to endure. We also know that your portfolio is set up for that, has been set up for that, and that this downturn is simply a normal function of the market for a host of reasons that will recover and go back up and will reach all-time highs again. We know this. No one can predict the market when this is going to happen and how fast it's going to take place. But we do know the next 100% move in the market is up. And this is the time to rebalance your accounts, add to your equities, and be prepared to take advantage of this down in the market and watch your assets soar as this market recovers. So we've discussed taxes, we've discussed 529s, we've discussed mortgages, we've discussed the market, RMDs, Roth conversions, student loans, and life insurance cash value. I assume there's some questions out there. Let's take a look in the chat, make sure we answer whatever questions you have. If you have any questions, please put them in the chat. Know that we're here. Know that this is a great opportunity for you to pick up the phone and call us, get on our calendar, whether it be by phone, by video conference, in person. We're happy to meet. We want to make sure that you're comfortable and that you know that we're here to take care of whatever's going on for you. Let's go through some of these questions. Let's see. Oh, great question from Tony. He wants to know, will our monthly withdrawals be reassigned to come out fixed due to the market action? It's a great question. One of the things we are looking at right now is that in every case where we have you taking out monthly or quarterly or systematic withdrawals from your accounts, we want to make sure that you're taking those from the fixed assets, not from the equity assets. And we are redirecting withdrawals and may need you to sign some forms to do that. If we do, you will have those, and that will be discussed on our call. Absolutely, we want the withdrawals to come out of fixed assets right now, not out of equity assets on a monthly basis. Great question. We will absolutely be doing that. Sergey, will we share this recording? Absolutely. There will be, this is being recorded, should have mentioned that in the beginning, and this will be posted on our YouTube page for you to view. We will also be sending out an email with a link to the video for you to watch. And talking points, we will definitely just do a quick post of a number of talking points. And again, we will be discussing these specific things with each of you as we have these calls and meetings. Paul, how are banks looking at home equity loans in this environment? Is it a good time to lock in terms? So I haven't heard any banks yet having a credit crunch. You know, one of the things that happened in the 2008-2009 market downturn is that the banks weren't lending. Similarly, at the same time, the banks were in a credit crunch. That was going on. The banks were in a lot of trouble in 2008-2009. That's significantly what precipitated the drop in the stock market. Today, that's not the case. The banks are stronger than they've ever been. The Fed is pouring money into the economy. They are cutting interest rates to zero, and the government is standing behind lending both at the SBA level and at the individual level. So variable rate home equity loans right now should be really low. Maybe they're not. The banks are getting some good interest on these right now. If you can get a fixed term at a low rate, 3% or under, I always like fixed money under 3%. I'd probably jump onto that opportunity, take advantage of that. What I wouldn't be so super concerned about right now, but we should certainly pay attention to, and we will be, in 2008, 2009, banks called significant numbers of home equity loans because of the credit crisis. They also reduced lines of credit significantly due to the credit crisis. So at the time, we advised people to max out their home equity line draws and put that money in reserve, no risk reserves, so that they would have the available cash should they need it for any opportunity or anything that might have come as a result. I'm not prepared to say the same right now, although it's something to consider. But right now, we haven't seen any banks start the mass action of calling loans or locking down loans. What we've seen is the banks more than willing to bend over right now and lend relative in these markets because the Fed is just giving them cheap money. So we'll be watching it. It's something I think we should absolutely be looking at, and know that we'll pay attention to it, and then you should as well. Mike Walsh, is this a good time to buy individual stock? I would never. Personally, 33 years in business, I've never advised anyone to buy a single stock. I've never owned a single stock. I'm not buying any individual stocks. I don't know who's going to come out of this pandemic alive and well and who's not relative to companies. I wouldn't think this is a great time to go fishing in the marketplace and hope that the company you buy the stock of is going to be the one that succeeds in the face of this while others fail. Having said that, it is your money. I can't tell you not to buy individual stocks, but my opinion of that is and has always been that buying individual stocks is speculating and gambling and rolling the dice to see what happens in the buy. Absolutely, positively, stocks are way down in price right now. A number of high quality, great companies are being beat up in the market. I will tell you that the portfolios that we advise you to invest in own those companies and are continuing to buy them as money comes into the portfolios, which right now, prudent investors are investing and buying. You know, what this does, what this time in the market does, is it takes money from the weak and the uninformed and transfers it to the wealthy. This is when the wealthy get really rich, because individual investors tend to sell into this market. You have to realize that as this market goes down, it's going down because people are selling. And for every person that's selling, whether you realize it or not, somebody has to buy. So if you're selling right now, you're giving a wealthy person the opportunity to buy your stock at a very low price. If you're buying right now, you're the one buying from the person scared, selling right now, thinking this will never recover. We're optimistic. We believe this will recover. It always has. We have no reason to believe this time is any different than any past correction or bear market that we've ever experienced, or that the marketplace going back over 100 years has ever experienced. Having said that, again, I'm not going to gamble in individual stocks. Never have, never will. If you choose to do that, just know that in our opinion, that's speculating and gambling with your money. And if you do that, know that we hope you pick the right ones, and we hope they grow to the sky, and that you make so much money that you say, I didn't listen to you and I made more money than I ever have. We hope you don't get burned by buying the wrong one. It's not our position to do, and we never have and never will. Question, what about estimated tax payments for the 2020 tax year? Great question. Have not heard anything about that yet. We've looked at the state site, and I've looked for the federal. All we've seen so far is that it says tax returns and federal tax payments due April 15th are not due. I can look at the IRS site, haven't pulled that yet. A quick look at irs.gov will no doubt tell you whether or not the federal government has put on hold estimated tax payments for the upcoming quarter. I can tell you we will do that as soon as we get off the line. And if it's the fact that there are not estimated taxes due, we will zip out an email to that effect to everybody on the call right away, letting you know that estimated payments are not due. I haven't seen that yet. Don't know whether they've done that yet. We will let you know as soon as we do. Next question. How fast can the automatic withdrawals be redirected? If we want to stop automatic withdrawals, you need to let us know that right away. And we can have a form to you and have them stop depending upon the day of the month you get yours. So if you get your automatic withdrawal on the 20th or 22nd or 25th, it might be too late this month to stop them. If you get it on the 5th of the month, undoubtedly we can stop it before the next one comes out. Generally, we can stop them in a day, but depending upon the date they're set up for, determines whether or not it would be stopped for this month or next. But we can stop them immediately. An email from you to us telling us you want them stopped gets a form out of our office to you to sign. As soon as you sign and get that back to us, and we can take a scanned copy of that, we send that to the custodian and put a stop on those immediately. So that's how quick. We can get them done very, very quickly. Brett, what's happening with business interruption insurance in regards to the coverage for COVID? That's a great question. Unfortunately, from everything I've heard, read, and seen, liability insurance and business interruption insurance does not cover pandemics, which is absolutely disgusting and stunning at the same time. I've not seen any insurance company step up and say, we're going to pay for it. So as a result, the first one would be an amazing trendsetter. I think it's worth calling your insurance company, not the insurance agent, and writing that. I think it's also worth starting a social media campaign for business owners that have business interruption insurance to petition two directions. One, to your insurance company to say, how can this not be covered? And two, to your congressmen and senators again, asking them to implement changes. I don't like regulation. I'm not a government control guy. The government irks me, and having them tell me as a business owner what I can and can't do, when I can and can't do it, drives me crazy. But here's what I will say with regards to this subject. I think it's a great subject for the government to step in. Instead of sending $2,000 checks out to people, I would rather the government enforce that the insurance companies have to cover pandemics under business interruption insurance, allowing you, the business owner, to stay in business, keep your office and your business opened, keep paying your employees wages, and then let the government deal with the insurance companies at the back end to make them whole relative to claims paid. What that does is it sends a clear message out to the world that we are not going to let socialism pay everybody money for not working, but we are going to reward business owners and conscious people in business who have made a decision to spend their money to put in place steps to prevent against something causing a problem in their life, and being rewarded for that by being paid via their insurance policy, and let the government and the insurance companies square up later. To me, those that don't have business interruption insurance then pay their own price, and those that do get the benefit of what they put in place in case something like this happened. I would say get a campaign going in the marketplace to make that happen. And as I said, I think it's worth a call to your congressmen, your senators, legislators, the media, to put that out there that this is the way, that as a result, they can handle this cash crunch for business owners in a much better way than sending out checks to employees that can't work right now. There you go. So my rant on government and regulation, there you go. Let me answer Sergey's question. I heard that you're going to call within 7 days, but given volatilities, it makes sense to connect faster to rebalance and take advantage of lower prices. Or you think there's enough time before markets start roaring because there's suddenly light at the end of the tunnel? Great question. What I said was we will be in touch with everyone within the 7 days. As fast as I can dial, and as fast as and as long as you want to talk. And let's face it, you all know me, I can't say hello in under 10 minutes. So the fact is, we will get to everyone as rapidly as we can. Our hope is to have everyone talked to by Monday or Tuesday. What I can tell you is I promise we will have talked to everyone by Friday. I can't tell you we will have everyone done by Tuesday. If I want to work all weekend, which I'm going to do some of, certainly we will get more of it done than less. Do I think that in the next 7 days, the market is going to turn up so dramatically that if you were to rebalance and buy into this market that we wouldn't get to take advantage of the opportunity? I don't think so. I would love to miss the opportunity to talk to you and watch this market go roaring back in the next 7 days to an all-time high and have missed for you the opportunity to get back in at these lows and ride that wave back up. I don't think we're going to see a 7-day recovery. The president announced earlier this week his 15 days to beat the virus. I don't think we're in day 3, more or less day 15. The governor of California locked down the state last night. I think others may follow. I don't think we've seen the end of what is a crazy market, and I don't think the 1 week is going to make a difference. Having said that, as I said earlier, if you want to be certain that you talk to us before we talk to you, send us an email, lraskin@raskinglobal.com, and you will move to the top of the list, and we will get in touch with you sooner than you would have been in contact on the list. How can I do that? Because you've chosen to take your time to listen to this call. You care about what's going on in your financial future, and you want to get this dealt with and take advantage of this opportunity that this market drop has availed. So we're happy to talk to you sooner instead of where you would have come in on the list, and simply get this handled for you as fast as we can. Any other questions? Okay, so if we don't have any other questions, then we thank you for listening. Again, if you want to reach out to us, lraskin@raskinglobal.com. This session has been recorded, will be posted. There will be an email out to you with the recording link so you can watch it again. We thank you all for watching and for paying attention. We hope you stay well. We hope your family stays well. Thank you for being here. You're welcome. We're happy to have put this out. Watch your emails for more. We will be doing other sessions. If there's something we believe is important for you to hear, we will let you know about that and reschedule the next and the next and the next as often and as much as we have to do these. Hope everybody has a great weekend. Stay well. Don't forget to wash your hands for 20 seconds, 10 times a day, or whatever it takes. And don't touch your face. We'll see you all real soon. Stay well. Bye-bye.